Hey everyone! Welcome back to Ample Assets, your go-to place for everything finance and personal growth. Today, we are diving into a crucial topic, Investing 101. Investing can sound intimidating, but it's one of the most powerful ways to grow your money and build wealth over time. In this video, we'll cover the basics, why we invest, what it means to take on risk, and how you balance that with reward. Whether you are just starting out or brushing up on fundamentals, stick around. Why do we invest? So, why do people invest? The simple answer, to grow their wealth. But let's break that down a bit more. 1. Beat inflation. Inflation means prices of goods and services increase over time. Your 1 lakh rupees today won't have the same purchasing power 10 years from now. Investing helps your money keep up with, and hopefully outpace, inflation. 2. Achieve financial goals. Whether you are saving for a house, your kids' college fund, or retirement, investing can help you reach those goals faster by generating returns that a savings account simply can't provide. 3. Compound growth. One of the greatest forces in finance is compound interest. This means the money you invest earns returns, and then those returns start earning more returns. Over time, this creates a snowball effect that can significantly boost your wealth. 4. Financial independence. Finally, for many, investing is the key to financial freedom, where your money works for you, not the other way around. Investment risk versus reward balance. Alright, so now we know why we invest, but what about the how? One of the first things you'll encounter as an investor is the concept of risk versus reward. In investing, risk refers to the possibility of losing some or all of the money you've invested. Reward is the potential gain you expect in return. The key is learning how to balance the two. Low risk, low reward. Let's start with the safer side. Investments like savings accounts, government bonds, and money market funds are low risk. You are not likely to lose your money, but the returns are usually lower, often just a bit more than inflation. You won't see huge growth here, but these investments are good for people who want stability. High risk, high reward. Now, on the flip side, we have high risk investments like stocks, cryptocurrency, or even real estate. While these investments offer the potential for big rewards, they come with more volatility. The stock market, for example, can rise sharply in 1 year but drop significantly the next. You need to be prepared for ups and downs if you go this route. Finding balance, investment risk tolerance. So, how do you decide what investment is right for you? This depends on your risk tolerance. Everyone's tolerance is different based on their financial situation, age, goals, and personal comfort with risk. For example, if you are young and have time to recover from potential losses, you might be okay taking on more risk for higher returns. But if you are nearing retirement and can't afford to lose what you've built, you might lean towards safer investments. It's all about finding a balance that fits your financial goals and personality. Investment diversification, spread the risk. A smart way to manage investment risks without sacrificing reward is diversification. That's a fancy word for not putting all your eggs in one basket. Invest in a mix of assets, like stocks, bonds, and real estate. You will reduce the impact if one investment doesn't perform well. Why should you start investing early and be consistent? The last piece of advice, start early and be consistent. The earlier you start investing, the more time your money has to grow. And consistency, like contributing regularly to your investments, makes a huge difference in the long run. So to wrap it up, we invest to grow our wealth, beat inflation, and reach our financial goals. But there's always a balance between risk and reward, and it's essential to find the right level of risk for you. Remember, diversification is key, and the earlier you start, the better off you'll be. If you found this video helpful, make sure to give it a thumbs up and subscribe for more content on personal finance, investing, and building your best financial future. Thanks for watching, and until next time, happy investing.